Hello and welcome everyone to this week's Gold and Silver Club, presenting the Commodities Corner, presented by myself, Phil and Nik at the Gold and Silver Club. Guys, we're just going to do a quick check. You can hear the sound okay and the visuals, the slides are coming up okay for you. Had a slight technical problem earlier. I just want to double check you can hear me loud and clear. Fantastic. Okay, in that case, we shall get started. So it's been an incredible 24 hours on the commodities markets. I hope some of you caught the moves that we've had. We'll certainly be looking at additional setups that we've got lining up today as well. The live session will cover a review of the commodity markets this week. We'll be looking at our top trades of the week. We'll be covering live technical analysis and trading, identifying highly profitable trade setups. We'll look at the week ahead, so the key events looking forward. And of course, we'll be answering any questions you may have on today's call as well. So this week, we've seen gold price soars to 9-week highs after the FOMC statement. So gold price surged over 4% just yesterday to record its best one-day move in 8 months following the FOMC statement and continued tensions in the Middle East, which boosted safe haven demand. So for those of you who are on Tuesday's Commodities Corner, you might remember this was the big one, the FOMC statement we had on Wednesday. We saw a slightly delayed reaction, and the real big move was, in fact, yesterday. Following the release of the highly anticipated FOMC statement on Wednesday, the US Federal Reserve signaled it would not raise interest rates anytime soon, which was disappointing for traders who were expecting hints of policy tightening. The Fed also slashed its forecast for 2014 economic growth to a range of 2.1% to 2.3%, compared to its March forecast of 2.8 to 3%, which suggested that the US economy is estimated to grow at a slightly slower pace than previously expected. These comments from the Federal Reserve, combined with intensifying geopolitical tensions in Iraq and Ukraine, rekindled traders' appetites for the precious metals. Gold prices soared to their highest level in more than 2 months, from $1,268 an ounce prior to the FOMC statement, running to touch $1,321 an ounce just last night on Thursday, for a gain of 4% in less than 24 hours. Our silver also jumped to a 3-month high, climbing 5% to post its biggest one-day gain in 4 months. So in other precious metal markets, platinum rose by 1.6% to $1,467 an ounce, and palladium gained 1.5% to $835 an ounce. So both metals traded near 1-week highs as mining strikes in South Africa continue, as mining companies and workers fail to reach a deal to end the country's longest and costliest mining strike. So the markets have been extremely busy over the last 24 hours, and we've certainly seen some high impact breakouts on the precious metals. And we'll also take a look at the energy. The energies look set to they're coiling at the moment, look set for a breakout. We can take a look at some key technical levels there as well. And of course, we'll have a look at the agricultural markets also. Okay, so before we do so, I'm Phil Carr, professional trader and speaker. Welcome, of course, to today's Commodities Corner. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas, agricultural commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. And I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications, speak at numerous trading seminars, webinars, and workshops. Joining me in running the Gold and Silver Club is Nik, professional trader, investment analyst, and speaker. Nik began his career within private wealth management in 2002 before making the transition into proprietary trading. And prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally from some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula mindset tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications. We've appeared frequently on financial TV. That's just a bit of background on the Gold and Silver Club. We'll take a look at the price of gold right now. We're currently trading at $1,309 an ounce. A bit of a pullback, about 100-point pullback from last night's high. We'll take a look at the technicals very shortly. Before doing so, just look at the top trades of the week using the Gold and Silver Club signature trading strategies. So the top trades this week, of course, gold. The gold breakout was fantastic. We got that yesterday, essentially looking for an entry price there above 12.79. You had a lot of opportunities to get into that on yesterday's breakout. Just a very simple rise trade for the price to be higher. We broke out some very key technical levels, and we got above some very key resistance levels as well. As you can see on gold there, breaking out from its downward trend. Brent crude oil as well earlier on this week, entry at $140 US dollars per barrel. Rise trade there for the price to be higher. Lovely breakout. And we're just consolidating at the moment on both Brent and WTI. And silver yesterday, of course, was a fantastic breakout. Once we got above the $20 mark, we had a move all the way up to $20.92. Just a fantastic move on there as well. So I hope some of you caught those moves that we had on the market in the last 24 hours. And we'll see how the markets are starting to line up now as we come to the US session. Very simply, we'll be looking at the rise and fall type of trades on Binary.com. So very simply, if you select what rises, you win the payout. If the market exit price is strictly higher than the entry price, if you select falls, you win the payout. If the market exit price is strictly lower than the entry price. Very straightforward. We'll be looking at the sectors. We'll be looking at commodities. So how you can trade this on the sectors as well as how you can trade it on the pure commodities as well. Okay, so with that said, let's go and have a look at some technicals here. And bear with me as we just bring up binary.com as well. Okay, super. Right. The first market I want us to take a look at is copper. This is a copper chart at the moment. Copper had a lovely move breakout just this morning. We've got a V-shaped reversal pattern on the copper market. We've come down. We tested major support at 3.00. We've come up and we've broken the neckline here. So we've broken the resistance. We've had a really decent upward trend on copper from the beginning, really mid-March here, right through to the end of May. Had a slight pullback in the first couple of weeks of June here. And now we look set for a nice breakout. We had a nice hammer set up yesterday, broken out, and we look for a continuation now. So copper, I like very much for a buy at the moment. So if I just go across to binary, I'm just going to take a look. Here we'll be going to sectors. So start trading, go to sectors. Very simply go to the metal sector, the copper index, and I'll look to be in that trade for 4 hours. So here I'm looking for 81% payouts, pretty decent. So looking for $2,204 US dollars as deposit for a $4,000 payout. I'll take that. That just needs to be higher than 1 pip higher over the next 4 hours, getting that 3.0865. Just get that. 4 hours, 81% payout. There we go. Okay, good. That has now been executed. So copper looking very good indeed. Here's the nice V-shape that we've got here, V-shape reversal pattern as well. Okay, you can see that's just breaking out. So it's a nice triangle just breaking out from the neckline there. So looking very nice indeed on copper. Now, if we take a look at the oils at the moment, we are continuing to consolidate, but I do favour an upward move at the moment, particularly on WTI light sweet crude oil at the moment. We're continuing to consolidate. What you'll see is if you take a look at the chart here, we had a previous level of resistance at 105, which has now become support. Nice hammer here on the daily. Consolidation between 1682 and 1511. If we break 105, we'll be looking for a move just lower here to the lower end of the trend line again to test that. If we get a break above 106.82, we're essentially looking for a nice breakout here. We're looking for a move up to 107 and the 108 and ultimately up to the 109 level for a nice solid breakout here. But I do like, based on some earlier setups here, a continuation at the moment to the upside. A few hammers here as well. So just that WTI looking good. I'll come back to WTI. We'll look at Brent as well. Brent actually had a nice breakout earlier on this week, as we discussed. We've got a nice break above the 114 level. We've come up to 115.73 here. So we've had circa, since we broke out from that level, we've had in the region of about a 173-point move. So it's been a decent breakout to the upside. We're coming back. We're retracing a little bit at the moment. If we can get a further breakout above yesterday's high here, we could really be in for a decent rally. We may come back and retest 115 for a further spike to the upside, but I like WTI at the moment for a potential buy. Okay, looking at the US dollar index. Well, the US dollar index did sell off in style over the FOMC announcement. This is where the US dollar index was at the FOMC announcement. We just continued to sell off moved down about 50-point move down to 80.23. You can see we've got a nice hammer here for me on the daily. And remember, the US dollar index, particularly around news announcements, tends to move in the opposite direction to gold and silver. So today we are getting a bit of support. We've got a hammer yesterday forming. We're starting to see US dollar index actually picking up a bit of momentum here at key support. You can see we've got several bounces around this level previously. You can see 1, 2, 3 bounces, getting a good little bit of momentum behind this. This will put pressure on gold. We take a look at gold daily. And what you want to look at on gold, what you want to keep an eye on at the moment, very simply, is you just need to zoom out on your chart for gold and just take the trend channel. Go back to September 2012, take the trend channel. You draw 1, 2, 3 bounces going back to March 2014 when we hit 1393, and you'll see the price bounce exactly off 1321, the upper end of this downward trending channel. So a lot of traders looking at that trend channel. You can see where the price just came up to 1321. We can just move this ever so slightly lower here just to show you where we bounced off the level. 1321 is where we came to yesterday. Now we are seeing a little bit of retracement here at the moment. We've got next key level where we're finding support. Certainly 1300 will be a psychological level anyway, where if the market comes back down and retests that, we may see some support. We struggled a lot previously to break between the 1300 to 1315 level. We just couldn't break it as we were going into beginning of May, end of April. So this sort of area will represent some sort of support here. I think gold is really going to give us a decent setup again as we go into next week. We'll be looking to take the breakout above 1321, or we'll be looking for a retracement, particularly if we can break it below 1300, looking for a retracement back to around the 1285 level, which was the key level that we broke out of last week, which would be a bounce just coming back, take us back to the lower trend line, and then a bounce further up again. That's what we'd be looking at there, unless we could break that trend line and come down much lower. Otherwise, 1321, key level for us for a buy. Now, we've made a lot of money on gold this week already. At the moment, there's a bit of indecision on the market. I want to see how the US market treats gold on the US Open, if we get a breakout above yesterday's high of 1321, or if we see some profit taking here. And particularly if the US dollar index spikes to the upside, if we get a decent move up here, that will put pressure on gold and silver. Silver again, really nice breakout yesterday. You can see again, nice V-shaped reversal here for a decent breakout that we got yesterday. And we came up, broke through 20 with really some style, 100-point move to the upside. Really powerful move there that we had on silver. Silver's done well. Silver's closed above also its downward trending channel. So we've had a downward trending channel on silver really going back to July 2013. You can see that downward trend. In fact, if I delete this off and we just zoom out even more, you can actually see a more significant level which is starting to get broken as well. So if I just take the highs here going back to 2011, we link those up to previous resistance. You can see this was where we were finding a lot of resistance, which we were looking either for a break of support at around the 18 level or a breakout, and we have got the breakout. Okay, so we've broken out here. Next key resistance levels really for silver are going to be around the 22 level, and then major resistance around the 24 and 26 levels. However, we're doing pretty well on silver at the moment to maintain the gains here. We've had a big move to the upside yesterday. Silver hasn't just turned around, as you might expect, on non-farm payroll and just retraced and given back all of its gains. It's held on to those. You can see a lot of funds and institutions have got into the gold and silver trade from the amount of momentum volumes that we had yesterday on the market. Huge move. Average volatility on silver tends to be roughly 30 to 40 points a day. So we would triple that yesterday, triple the average volatility. Gold normally moves about 150 to 200 points a day. Yesterday, it moved over 400 points yesterday. So it almost triple its usual volatility. So we've seen huge breakouts in gold and silver. So next, we want to see if next week we will break above the highs here and just get a continued move. Next key level for silver really to get above is going to be $21 an ounce. Okay, so at the moment, that's what we'll be looking at moving forward. Now, if you take a look at some of the softs at the moment, the softs looking good, actually. If we go and have a look at corn, I do like corn. Corn's come up. It's retested the previous resistance level at 450, key Fibonacci level there as well. Very clear downward trend. Corn, I just see that selling off today. Usually we get more pressure in the US session. We've done well to spike up. We had a hammer early on in the week at support. We've come up, spiked up yesterday. All the commodities got a surge yesterday. We saw moves across everything: platinum, palladium, copper, gold, silver, corn, wheat, coffee. Everything moved to the upside in terms of commodities there. So We're getting certainly some profit taken now and a bit of a retracement. I think we could fall back into the downward trend here on corn. I do like this for a sell, just developing on the nice inverse hammer right at resistance on corn. So I will take that sell short here on corn. So I'm just going to go again to do this. If you've never taken a sectors trade before, you've got start trading forex indices, stocks, commodities, sectors, and I'm just going to go down to agricultural sector. I'm going to go to corn, get best price there for a sell short. 81% payout, it's pretty decent. So I'm looking for a deposit there, $2,207.30 for a $4,000 payout. That's pretty decent. 81% payout, be out of that in 4 hours. Just price needs to close below 447.75. Okay, good. That's done. Right, so that is corn. Right, we just take a look at wheat as well. Wheat, similar situation. Got a bit of a push higher yesterday, but really we're struggling. Got about 4 inverse hammers here in the last week. We're struggling to get above 597 and also the 600 level. Psychological resistance level there. We're still maintaining a downward trend at the moment on wheat. I prefer the corn trade at the moment. It's already starting to sell off right at that resistance level. But wheat could follow suit. If we see wheat start to tank today, particularly if we take out the weekly lows here, if we can come down and take out 57667, we're likely to build up momentum to the downside here on wheat. I definitely keep an eye out for that. And coffee as well. So coffee came down yesterday, broke through a major support zone. Very clear downward trending channel on coffee at the moment. It's not surprising that coffee got a bit of a lift yesterday too, given that all the commodities had breakouts yesterday. But we are still in this very strong downward trending channel for coffee. You can see, even though we had a hammer yesterday with a move to the upside, it looks like inverse hammers is starting to form here. And we did break through major support yesterday, which is at the 16598 level. And I expect here just to get we could at the most get a rotation up to the upper end of this resistance channel. But I think we're just going to see this taken out and a close lower here, particularly if the other metals get a bit of a sell-off. The other commodities sell off a bit today. I think coffee would just remain within its downward trend for the time being. Right, now let's also, so I'm just going to move over to oils, and looking good actually. I do like that on WTI. I'm going to look at taking here the light sweet crude oil chain trade here. We typically we do get towards the end of the week, they tend to rally more strongly as well, the oils. We're supporting well here. Brent's already holding its ground very well. Nice hammer delivered yesterday. It's got a nice, we've not really retraced much, 105 providing strong support. So I will take that trade. I'm just going to take that trade via, you can take oil trades either via commodities, just go to oil here. We'll just compare the payout. So 80, let's have a look, 88% payout, go to hours here. 91% payout. That's pretty good, actually. We'll just compare that with the sectors. I'll go over to the energies, crude index, 81% payout. So I'll tell you what, I'm going to go and take it as a commodity. We'll just go into oil here, get best price. Okay, I'm looking for a rise trade over the next 4 hours for the price of oil to close higher, 91% payout there. So good support here for both Brent and WTI. So 91% payout. My deposit, $2,092.09 for a $4,000 payout. So I'll take that. Good, it's been done. Excellent. Right, let's move over to, we'll just take a look. Also, to take a quick look at natural gas as well. We're really, for natural gas, we're looking to break out of a major resistance level here, which is 4.885. We've had a nice pullback today, this week, even on the weekly. Just take a look at the daily as well. We've got a nice trend channel there, which has been forming, as well as this larger setup. We've actually come and found support at a trend channel here as well for natural gas. So I can just show you this very clearly. This is natural gas market. Got two trend channels there, actually. You've got one trend channel here and a secondary trend channel, which is forming here. If we can break that on natural gas, if we get a breakdown, we come down and break through this trend channel, we could really start to pick up some momentum to the downside. I'll wait for further confirmation here. I'd like to see a break just below yesterday's low for a sell short, below 4.544, in order to trigger this for more selling pressure on nat gas, or we may get a reversal. Looking really for a decent buy signal here at the moment on nat gas. So I would rather take the energies, oil at the moment, going through Brent and WTI. Okay, so with that, let's just do a quick overview of the markets and we'll just do a summary of what we're looking at the moment. Okay, so let me just get this lined up for you. Okay, so copper at the moment, as mentioned, copper is a good buy at the moment. Copper at the moment, we've just broken out of this nice resistance level neckline at 3.07338. Decent move that we're getting at the moment, so I expect the momentum to continue today. Oil here looking for a continuation at the moment. I would keep just a breakout to the upside. With gold, I would keep an eye on this. We want to see whether we'll get a retracement back to around the 1300s or whether we get a breakout of 1321. So gold has been fantastic this last week, and that's what we're looking at for the next stage of this move. A US dollar index, watch that for the inverse correlation here with certainly with gold. If this spikes up to the upside, will put pressure definitely onto the gold market. Silver doing well here as well, XAG USD to hold onto its gains. So we've had a really nice solid move to the upside on silver, still maintaining its gains. I'll look for a further breakout next week above $21 an ounce. Coffee, just keep an eye on that at the moment. The softs, the one that's triggering fastest at the moment is corn, which we've taken a sell position on at 450 resistance there. It seems to be moving quite nicely. I expect that to just fall within the overall downward trend, and then wheat to follow suit, and coffee probably later on in the day during the US session. It may get a spike higher here because we had a hammer yesterday up to the upper end of the resistance channel and then just sell off. Natural gas awaiting confirmation, see if it breaks 4.55. Platinum and palladium, incredible moves this week, but these are markets which you can trade through the metals index as well on the sectors. Okay, so we've got quite a lot to look at today. Let's have a look into next week, what major news announcements are going to move the market, shall we? So the key 6 announcements which will affect the markets will be as follows. We'll be looking at the following. So we've got Monday the 23rd of June, 3 p.m. BST, 10:30 a.m. Eastern Time, the US existing home sales. So existing home sales measure the change in the annualized number of existing residential buildings that were sold during the previous month. The report helps to gauge the strength of the US housing market and is a key indicator of overall economic strength. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. Next Tuesday, the 24th of June at 3 p.m. BST, 10 a.m. Eastern Time, we've got the CB Consumer Confidence. That report measures the level of consumer confidence in economic activity. So it's a leading indicator as it can predict consumer spending, which plays a major role in overall economic activity. High readings point to high consumer optimism. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. That's, of course, inversely correlated to gold and silver. Next Wednesday, the 25th of June, 1:30 p.m. BST, 8:30 a.m. Eastern Time, we have the US core durable goods. That report measures the change in the total value of new orders for long-lasting manufactured goods, excluding transportation items. A high reading indicates increased manufacturing items, so a higher than expected reading should be taken as bullish for the US dollar and a lower than expected reading taken as bearish, which will inversely affect gold and silver. Now, next week on Wednesday, the 25th of June, at 3:30 p.m. BST, 10:30 a.m. Eastern Time, we have the US crude oil inventory. That data reports a number of barrels of crude oil commercial firms have in their inventory. Commercial firms report those inventory levels to the Energy Information Administration on a weekly basis. So a higher than expected reading should be taken as bearish for crude oil, while a lower than expected reading should be taken as bullish, which will definitely affect the oil markets. Next Thursday, the 26th of June, at 1:30 p.m. BST, 8:30 a.m. Eastern Time, we have the US initial jobless claims, and that data reports the number of individuals who filed for unemployment insurance for the first time during the past week. So it's the earliest US economic data, and week-to-week numbers can be volatile. A higher than expected reading can be taken as bullish for the US dollar, and a lower than expected reading bearish, of course, inversely affected to gold and silver. And then next Thursday, the 26th of June at 3:30 p.m. BST, 10:30 a.m. Eastern Time, we have the US natural gas storage report. Now, the Energy Information Administration, the EIA, natural gas storage report measures the change in the number of cubic feet of natural gas held in underground storage during the past week. So again, a higher than expected reading should be taken as bearish for natural gas, and a lower expected readings should be taken as bullish for natural gas. So just take a jot down those key announcements. Those will definitely impact the commodities markets next week. Those are the 6 key announcements: US existing home sales, CB consumer confidence, US core durable goods, and also US crude oil inventories, US initial jobless claims, and US natural gas storage. Those are the 6 major announcements. Excellent. Okay, and just going back to your question, Andre, on all the indicators we use at the Gold and Silver Club and the technical levels and the key levels we look out for, you can certainly find out more about how to get our charts and how to get all the key indicators we use. Very simply, you can go to Learn to Trade Commodities with the Gold and Silver Club. We've got upcoming courses available at our training centres and online. You can find out more about how to join our live trading room program as well, guys. Just very simply, you can go to www.jointhegoldensilverclub.com or contact us at our Hong Kong, Budapest, or Johannesburg, or New York, or London offices, whichever is closest to your region, to find out more about our upcoming coaching programs and live trading programs. So do make sure you take advantage of that. And of course, make sure you subscribe to our newsletter. You will get free weekly reports on the precious metals, energies, and agriculture for the upcoming week, which will help you with your market analysis, looking at prices for the week ahead. Okay, right, fantastic. So a few questions on that, how you get in touch. So very simply, again, guys, just www.jointhegoldensilverclub.com. Excellent. And of course, we will see you again for Tuesday's Commodity Corner at the same time, at 12:30 p.m. BST. So I wish you good luck with today's trading. Good luck for the rest of the week's trading. Have a great weekend. Thanks to Binary.com and the team for putting on to today's webinar. And we'll see you all on the next one. Okay, so take care, everyone. Good trading. Okay, thanks, guys.